Hello everyone, my name is Heather Ruddock. I'm Strategic Engagement Manager at Wolters Kluwer Corporate Reporting Solutions, and it's my very great pleasure to welcome you to CCH Networks today. In particular, I would like to especially welcome Anthony Souklis and Caroline Barth from the ATO. They are the ATO team that has been developing the requirements for country-by-country reporting, and we're absolutely delighted to have them in the room with us today. I would also like to welcome Kathy Thompson, who is the Group Tax Director at Aristocrat Leisure, who will be the facilitator for today. This is the fourth in our series of programs around Australia. We've been in Perth, we've been in Brisbane, and we've been in Melbourne, discussing getting ready for country-by-country reporting, and at each session there have been many questions. So we encourage you here in the audience today to ask questions, but if you wouldn't mind waiting for a microphone so that we can hear your questions, and I think the panel will also repeat them, that would help, particularly as we are webcasting. We have some 160 people watching this, not just around Australia, but also in the region, some from the US and some from Europe. Not surprisingly, this is a pretty interesting topic. It's new, and we want to hear from you also as to what you would like from us coming forward in the future. So please, on the webcast, we encourage you to email your questions in the audience, ask them of us as well. And in your packs, you will see feedback forms. We'd be very pleased if you could complete those. The webcast attendees will receive theirs electronically because you own these networks. You need to tell us what you want from us and we will put it together. Without your input and your feedback, we can't build programs that are relevant to you. So please complete those forms. There will be people collecting them at the end of the day here. That would be great. It's my great pleasure now to hand the program or the session over to Kathy Thompson to introduce the ATO more formally and to take it from there.
Country-by-country reporting is a new and very interesting development in the tax landscape. Whether you are a multinational group headquartered in Australia or you are a subsidiary of an overseas parent, there is a new level of reporting requirements that we will all need to address and respond to the ATO, but more globally with other tax authorities. CBC reporting is designed to increase tax transparency. It's designed to give tax authorities sufficient information to conduct a TP risk assessment. It also will give tax authorities information on what's called a significant global entity, an entity with more than $1 billion of revenue or 750 million euro under OECD standards, who are engaged in BEPS-type activities. So what is CBC reporting looking at? It's looking at your global allocation of income. It's looking at the substance of your economic activity and your intercompany pricing. What the tax authorities are seeking is a more holistic approach to understanding your tax profile. They are looking at the end-to-end position across tax jurisdictions, based on economic substance and not on pricing or benchmarking alone. So it's the ongoing evolution of transfer pricing. Having myself done quite significant work in Division 815 and the allocation of income with the ATO, it was once described to me as we'll no longer just see the elephant's ear or his eye, but we will see the whole elephant. And so then the real question is where should that be appropriately taxed? So I'd like to hand over now to Anthony and to Caroline, who will take you through the design of the Australian CBC reporting. Thank you.
Okay, hello everybody. Look, thank you for taking time out today to attend this session. Thank you, Kathy, thank you, Heather, for the introduction. Look, country by country reporting, and look, Kathy's given what I think is a really good overview of what it is. Look, this session is really around getting ready for country by country reporting. Now, I do see some familiar faces in the audience, and I have in the sessions that we've held around the country, those who have been involved in the consultation around the country by country reporting. And look, it's been a really interesting journey thus far. We've learned a lot. I think you'll see that there's been some significant evolution in our thinking around country by country reporting as a result of the consultation and the feedback. But we have reached a really important point, and that's around you knowing what you have to do to be ready to implement for country by country reporting. And I'm hoping that at the end of this session, for some of you, it will be a light bulb moment, or the penny will have dropped as to look what it does mean and what you need to start thinking about to meet your requirements, your lodgement requirements for CBC reporting. So what is country by country reporting? Well, it's really part of a global trend of increasing tax transparency. So a part of that trend is increasing disclosures to government. Country by country reporting is one such example. Two other examples are the Common Reporting Standard and FATCA. Another part of public transparency is things like the Section 3C public disclosure of income, taxable income and tax paid for entities with more than $1 million of income. And the final part of increasing transparency is things such as what we see through disgruntled employees. Examples are LuxLeaks and the Panama Papers. So whether taken individually or we view them as a collective, all of these things actually give us greater insights into whether multinationals are paying their fair share of tax. So country by country reporting actually implements Action 13 of the OECD's 15-point action plan. Now, Action 13 requires the development of specific rules regarding transfer pricing documentation, which enhance transparency for the tax administration, but importantly, taking into account the compliance cost for business. Now, in October of 2015, the OECD published the Action 13 final report. And that report sets out some pretty detailed guidance on the implementation of country by country reporting. Then in June in this year, the OECD published an additional guidance paper which provided more specific guidance in response to questions raised in regard to that final report. Now, the ATO has published its Law Companion Guide on country by country reporting. Now, we published that in December of 2015. Now, that guidance, Law Companion Guidance note, gives some clarity around the law, as well as some practical guidance. Now, as you'll see, for those of you who have seen that, that guidance package, it reflected our view of the world as at December 2015. Now, importantly, if you look at that and then you compare and contrast to what you hear today, this is where you'll see an evolution of our thinking. Now, one really good example is we expected that we would implement a three-tiered approach to the local file. However, through consultation, we heard quite loudly that that was far too complex, and it's been stripped back to a two-tiered model. So while it's interesting to look back at 2015 and review that Law Companion Guide, bear in mind that there has been some significant evolution in the country by country reporting. Now, Australia is one of 44 countries that have signed the Multilateral Competent Authority Agreement, and this agreement is the mechanism that will actually facilitate the auto exchange of country by country reports. So the Australian government actually first announced its commitment to the implementation of CBC as a part of the 2015-16 budget. Now, CBC reporting is actually part of the Tax Law Amendment Combating Multinational Tax Avoidance Bill, which received royal assent on the 11th of December last year. Now, the new law did two things. One, it defined this concept of significant global entity, and we'll get to that a little later on. And it also inserted subdivision 815E, which outlined the new reporting requirements for a significant global entity. And this legislation took effect from 1 January this year. So CBC reporting will apply to entities that are significant global entities for either the whole or part of the preceding income year. Now, section 960-555 gives us the definition of a significant global entity. Now, it's important to note when you read the legislation that it actually makes reference to this OECD final report, the Action 13 final report. So it's really important that as you read through and try to make sense of what this means for you, you read the two in conjunction. And that'll help you understand what it means, but importantly, what is required. Now, the way our legislation works, it's significant global entities will be required to provide 3 statements to the Commissioner: a country-by-country report, a master file, and a local file, within 12 months after the end of their income year. Now, what will happen then is the ATO will automatically share with other countries just the country-by-country report, as well as will automatically receive from other countries the country-by-country report for all significant global entities that operate here in Australia. Now, under this new law, this new regime, it's actually up to you to determine if you are a significant global entity for all or part of the preceding income year, and therefore to determine whether country-by-country reporting applies. So the ATO will not be notifying you that you are a significant global entity and therefore need to lodge the relevant country-by-country reports. Now, this is really important, particularly for the subsidiaries of foreign headquartered multinational enterprises. Now, you will need to think about whether country-by-country reporting applies, as Australia is an early adopter of CBC reporting. So there's a good chance that CBC reporting might not be high on the radar of your parent company, but you need to know whether your global business meets the threshold for a significant global entity. And that threshold is 1 billion Australian dollars, which is different to the OECD's 750 million euro, but really it was the Australian dollar equivalent at the time of the law passing. Now, it's important to note that you need to get the Australian dollar equivalent of your global income to determine if you are an SGE for Australia's tax purposes. So there could be the unlikely event where your global parent actually falls below its country's SGE threshold. However, you will still have a country-by-country obligation in Australia if the Australian dollar equivalent exceeds that $1 billion. So country-by-country reporting requires 3 different reports to be electronically lodged. I have to stress, it's electronic lodgement with the ATO. Now, the final report, it's an interesting report, has 60-odd paragraphs of commentary and a number of annexes. And these annexes, 1, 2 and 3, are the ones that provide the real detail into the 3 reports that you need to provide. Now, Annex 3 to this report reports on or provides the structure and general instructions for the country-by-country report. Now, this report essentially consists of 3 tables. So Table 1 is an overview of the allocation of revenue, profits, taxes, and business activity by tax jurisdiction. So for each jurisdiction, an SGE will be required to provide a breakdown of their activities in each country that they operate. And typically they'll extract this information, because it will be quantitative, from their financial accounts. Now, financial account data, it may represent consolidated financial accounts, it may represent entity statutory accounts, or it could represent internal management accounts. Because of the nature of which accounting source the information can be extracted and obtained from, we know that it might be difficult to reconcile the information in your country-by-country report with your global statutory financial accounts. Now, Table 2 will provide a list of constituent entities grouped by tax jurisdiction and an indication of their main business activities. of these constituent entities. And in Table 3, that's where we allow you to provide further information. So, for example, you might want to actually provide details of the source of the financials that you used to populate your country-by-country report. You may also recognise that the data may seem to have anomalies and that the tax authority might be interested in understanding those anomalies, so you can provide some comments that can explain those anomalies in the data. Now, as I said earlier, it's the country-by-country report, and this is the only one that is exchanged automatically with other jurisdictions that have signed the Multilateral Competent Authority Agreement. The master file, or local file, or parts thereof, will only be exchanged upon request. Okay, and that will be under our standard treaty processes, and they'll be subject to various tests, such as foreseeable relevance, before they are exchanged. So the main points in this lodgement timeline, really it's that the 3 country-by-country reports must be lodged within 12 months of the end of your relevant income year. Okay, so if your income year starts 1 January 2016, it ends in 31 December 2016, its lodgement is due by 31 December 2017. Similarly, the blue boxes, the ones in the lower part, are for those that have a July through June financial year. Now, importantly, it's in September 2018 that the ATO will first exchange country-by-country reports with other jurisdictions. Now, it's also been mandated by the OECD that countries that are participating in country-by-country reporting must carefully review the implementation of this new standard and will assess by no later than 2020 whether modifications of the content of these reports should be made. So this will include looking at whether we need to collect additional information or different information. Now, an example of something that we will consider in that 2020 review is whether the Euro 750 million or Australian $1 billion threshold is appropriate in defining a significant global entity. Now, the OECD has also indicated that mechanisms will be developed to monitor jurisdictions' compliance with their commitments and to monitor the effectiveness of the filing and dissemination information. And the outcomes of this monitoring will also be taken into consideration as a part of that review that will take place by no later than 2020. So now I'll hand over to Caroline, and she will walk you through the master file and also some of the specifics around eligibility for local file.
Okay, I'm going to start off by talking about the master file. So Annex 1 to the final report details the information to be provided in the master file. The master file itself is a high-level summary of the global business operations, which provides important context to the tabulated data already provided in the CBC report. So the master file must be lodged electronically with the ATO, and this can be done by submitting it as an attachment, for example, a PDF, to the local file. So you'll be able to lodge your local file and your master file together as part of one lodgement with the ATO. So it's worthwhile to just stop and note here that the local file must be lodged as an XML document, which is compliant with the local file XML schema, which we are currently developing. So the local file XML schema will specify the content and structure of the local file. In terms of the master file, local subsidiaries of foreign headquartered multinationals should be able to obtain a copy of the master file from their global parent and submit it with the ATO. The master file should be provided to us in English. So the information in the master file can be grouped into 5 main categories. The first being the group's organisational structure. The second being a description of the group's business, including important drivers of business profit, a description of the supply chain and main geographic markets of the group's 5 largest products and services by turnover, a description of important service arrangements between members of the group and the transfer pricing policies for these arrangements, a brief written functional analysis, which includes contributions to value creation by individual entities, and a description of important business restructures during the year. The third category is a description of the group's overall strategy relating to intangibles, including the location of principal R&D facilities and management, a list of the group's intangibles that are important for transfer pricing purposes, and a description of the group's transfer pricing policies related to R&D and intangibles. The fourth category is information about the group's intercompany financial activities, including a description of how the group is financed, a description of the group's transfer pricing policies relating to financing arrangements between associated enterprises. The fifth category is information about the group's financial and tax positions, and this includes the group's annual consolidated financial statements for the year. So now I'm going to talk a little bit about the local file. So our local file is in line with Annex 2 of the OECD final report, and it has been adapted to reflect local conditions in Australia. It requires detailed information relating to specific intercompany transactions. So we have developed a 2-tiered approach to the local file, which has enabled us to minimise the cost of compliance for those who have relatively simple affairs. So our 2-tiered approach consists of a short-form local file and then a local file. So to be eligible for the short-form local file, an entity must not have any international related party dealings or IRPDs on the short-form exceptions list. If an entity meets this criteria, it must meet at least one of these additional criteria to qualify for the short-form local file. The additional criteria are that the aggregated value of IRPDs is less than 2 million, or the simplified transfer pricing record keeping criteria for small taxpayers, or the simplified transfer pricing record keeping criteria for materiality. So where an entity does not meet the criteria for the short-form local file, it will need to lodge the local file. Exceptions and exclusion lists. As I mentioned before, the short-form exceptions list is relevant for determining whether an entity is eligible for the short-form local file. So where an entity has transactions on the short-form's exceptions list, that means that it is not eligible for the short-form local file. These transactions include any derivative, including swaps, forwards, futures or options, any legal or equitable assignment of trademark, patent, design, copyright or other IP, any license or grant of use in relation to these trademarks, patents, designs, copyrights or other IP, and any IRPDs of a capital nature. So then we have the exclusions list. And the exclusions list outlines categories of agreements which are not material and therefore not reportable in Part B of the local file. This means that amongst other things, a copy of the agreement does not need to be provided for these transactions. These are agreements covered by simplified transfer pricing record keeping options including intragroup services, management and administration services, technical services and low-level loans, reimbursements under certain employee secondment agreements, certain low-value, low-risk service agreements, certain low-value, low-risk sale or purchase of intangible trading stock agreements, and the issue of ordinary shares. I'm going to hand over to Anthony again now, who's going to talk through the short form local file.
Okay, so eligibility, exceptions, exclusions, it is quite complex. I will excuse you if a lot of this seems to not make a great deal of sense on first reading. Even for me, I will admit that I do have to go back and just make sure that it's really clear in my mind exactly what we're talking about when we use these terms. So it is worthwhile just circling back to these concepts, so in your own mind it's really clear what they mean, but importantly what it means for you. Now, so eligibility and the two-tiered approach to the local file. Okay, so the short form. So Caroline's really outlined that the short form is for those businesses that we would consider to be simple businesses that we would expect to say or agree that they have a relatively low risk. Okay, so the short form local file is designed for those low value, low risk types of significant global entities. That includes where they're not required to lodge an IDS, so they fall beneath the de minimis $2 million rule, or they're taking advantage of some of the simplified transfer pricing record keeping options. Now, the information that we require for these particular SGEs is minimal. Okay, it's really pared back from that which the OECD outlines. Okay, in actual fact, if you do look at the Annex 2 of the OECD final report, you'll see that it breaks down the local file into three components. What we're asking for in the short form is the first box, just part 1, and it's really just qualitative information. Okay, so we don't need any information on controlled transactions, and we're not looking for any financial accounts of the local entity. So it's really stripping it back to reflect the fact that these businesses or SGEs are low risk, low value, and therefore the cost of compliance is probably excessively high if we expect them to lodge a full local file. So what do we want SGEs to provide if they're eligible for the short form local file? Okay, so for the local reporting entity, so for the local Australian business, all we want is a description and copy of the organisational structure of that reporting entity, including a description of the individuals to whom local management reports and the countries in which these individuals maintain their principal office. We want a description of the local entity's business and strategy. We want a description of any business restructures that have affected the local entity in the current or previous year. We want a description of any transfers of intangibles that have affected the local entity and an explanation of why it's an important or significant transfer, and a list of the local competitors of the local entity. And that's it. It's as simple as that. So for the SGEs that meet the eligibility criteria for short form, their lodgement obligation is fulfilled by providing that information. We expect that the parent company lodges a country-by-country report. We receive that through auto exchange. Master file is provided to you from your parent company, so you provide that along with the short form local file. And you've ticked off your obligation under country-by-country reporting. As I said, we're not looking for any information on your controlled transactions. You don't have to provide any analysis of the types of transactions or related party dealings that you have, and we're not looking for the local financial accounts. Okay, so what happens if you don't meet the eligibility criteria? Okay, if you don't meet the eligibility criteria for the short form, that means that you have to complete the local file. Now, the local file, okay, it was designed and built on the International Dealing Schedule. Okay, so Caroline mentioned it was built based on local conditions. So we have an IDS in Australia, And what we've said is, well, that's local conditions. Businesses here that have related party dealings have to look at and whether they lodge an international dealing schedule. Therefore, we will see whether we can leverage off the international dealing schedule. The reason being is we want to make it easier for businesses to use their current systems that already aggregate information for the IDS to complete their local file. So because of this connection to the international dealing schedule, the local file for us, for Australia, does differ to what is required by the OECD. Okay, so if you look at what I'm outlining now and you compare and contrast to Annex 2 and everything that the OECD requires, there are differences. I'll go through some of those differences. We do not require detailed comparability and functional analysis. We do not require information on adjustments that you make to your comparables. And we do not require an explanation of any transfer pricing analysis, and we don't want to know the assumptions that you used. Okay, so why is this the case? Why have we deviated? Because local file is around high-level risk assessment. Okay, it's about improving the ATO's ability to do high-level risk assessment of transfer pricing and profit shifting. We want information that we think is critical to do high-level risk assessment. We don't want comparability. If we want comparability and functional analysis, we've gone beyond high-level risk assessment. We're probably in a transfer pricing review at that point. And if we're at a transfer pricing review, we've already hypothesised there's a risk, and now we're looking to test and substantiate that particular risk. So that's when we're going to collect this additional information on comparability and functional analysis. We don't need you to provide all that information up front in a local file. So if you're a low-risk business, you prepare and you keep that information, but you don't have to lodge it. So what information do we want as part of our local file? Well, it's broken up into Part A and Part B. So Part A is for all of your controlled transactions. What we want to know, and I use controlled transactions and international related party transactions interchangeably. So for all your transactions, we want to know information such as who is the Australian party, the name of that Australian party, and the name of the overseas related party. The country of the overseas counterparty. We want to know the category of that transaction. So what type of transaction is it? And we're going to provide a list of those transactions. So it'll cover all of the types of related party transactions. And as you would expect, it actually links to the current IDS. We need to know, obviously, the amount of that transaction. And if there's any foreign exchange gain or losses associated with that transaction, we want to know what that gain or loss was. We want to know the IDS code for the TP method and documentation, and an indication as to whether that transaction is one on the exclusions list that Caroline mentioned earlier. Now, all of this information actually should already be available for those significant global entities who already prepare and lodge an IDS. Now, for Part B, what we require is, as part of our local file lodgement requirement, if you know it, we'd like to know the transfer pricing code used by the overseas counterparty. If you don't know, that's fine, you don't report it. And we want to know or have an indication of whether there is a written agreement covering this particular transaction, and if so, to provide a copy of that agreement. Now, to minimise the cost of compliance, we've actually introduced a couple of special rules which should and do aim at limiting the number of agreements that actually need to be provided under two specific circumstances, where you have an umbrella agreement arrangement and a relevant agreement series. So an umbrella agreement is essentially a series of sub-agreements that sits underneath a master agreement. And that master agreement actually sets out the key terms for the sub-agreements. And these terms cover off for the future supply for a good or service. And importantly, the sub-agreements are all governed under the terms of the master agreement. And with the sub-agreements, the three factors that will change are date, price, volume. In the event of, if you have an umbrella arrangement, or an umbrella agreement, we don't need copies of every agreement. We only need an example of one. And the one that we would like is the one that relates to the highest volume agreement in that income year. Now, similarly, a relevant agreement series, similar in that it's a repeating series of transactions, but they're not conditional on each other. It's just a set of repetitive transactions. Once again, it's between an Australian entity and the same overseas entity on the same terms except for those three key factors: date, price, volume. Now, once again, we don't need a copy of every agreement. All we want is an example, so one agreement that relates to the highest volume transaction in that income year. Finally, the final part of information that we're looking for as part of local file is a copy of any foreign advanced pricing agreement or rulings in relation to these agreements, and then the financial accounts of the local reporting entity. Now, the OECD gives us a little bit of guidance and help here in terms of defining what the financial accounts of a local reporting entity are. And it basically says we're looking for the best quality financial accounts available. So if the local entity has audited financial statements, that would be the best quality. If not, then you say the next best would be unaudited financial statements. And we recognise once again that the financial statements that you provide for the local entity will be different to the financial accounts that are provided as a part of the master file. So, in departing from Annex 2 of the OECD, in developing our local file for Australian conditions, we've recognised that there's a potential issue of duplication. Okay, so the IDS and the master file now contain very similar information. So we look at that and go, actually there's scope for duplication. How do we alleviate that problem? Well, we have an administrative solution, which is an option for SGEs to provide their local file in lieu of part of their international dealing schedule. So by providing that detailed transactional information in Part A of the local file, we can use that information to effectively reconstruct your IDS. Okay, so as an SGE, if you provide that information along with your income tax return, then you don't need to answer questions 2 through to question 17 of your IDS because the information is essentially the same. Okay, so the condition, this administrative solution works, but it's conditional on bringing forward lodgement. Rather than 12 months after the end of the financial year, this will have to be provided sort of 6.5 months along with your tax return. Now, Part B, so the agreements and APAs and your financials, that can still come within 12 months, but we do need that IDS information along with your tax return. Now, you may say, well, why? Why do you need it then? 2 key reasons. As you can expect in managing and trying to mitigate transfer pricing and profit shifting risks, we have a number of risk models. Okay, and those risk models look at relationships between information that's provided on the tax return along with information on the IDS. So we need it together so we can run those risk models across individual taxpayers and then across a broader population. We also use the information in the IDS to report to government. Okay, so it's a very important time series for us. Because it gives us really good insights into the health of the international tax system and, importantly, how things change over time. So we need to reconstruct that IDS so we don't lose that really important time series of data. And to be honest, given the continual focus on multinational tax avoidance and transfer pricing, I don't see there being diminished requests in that reporting to government. So now, to take us to the end of the presentation, Caroline will rejoin us and she'll run through a couple of examples on what your filing obligations might look like, and then provide some really good information on the exemption process.
Okay, I'm just going to take you through a couple of lodgement scenarios to start off with. So the first scenario we have here looks at an Australian headquartered global parent entity with a foreign subsidiary. So in this scenario, the Australian global parent entity will be required to lodge all 3 reports with the ATO, being the CBC report, master file and local file. And they must all be lodged electronically. The ATO will then automatically exchange the CBC report with the jurisdiction in which the subsidiary is located, provided there is a multilateral competent authority agreement in place. It's worth highlighting that country-by-country reports will be exchanged with participating tax authorities, subject to the information not being made publicly available. And that's consistent with the OECD guidance, which provides that tax administrations should take all reasonable steps to ensure that there's no public disclosure of confidential information and other commercially sensitive information that is contained in the 3 reports. So in the second scenario, we have a foreign headquartered global parent entity and an Australian subsidiary, SGE. So in this scenario, the Australian subsidiary will need to lodge the local file with the ATO, as well as the master file. And to do that, they'll obtain a copy of the master file from their foreign global parent entity. So as mentioned before, the local file and the master file can be lodged with the ATO together as part of one lodgement. The ATO will then receive a copy of the CBC report via automatic exchange with the parent entity's jurisdiction. And that is provided again that there is signatory to the Multilateral Competent Authority Agreement. So now I'm going to talk a little bit about exemptions. So the OECD guidance on Action 13 has been quite clear, stating that there should be no exemptions from filing the CBC report, including no special industry exemptions or exemptions for investment funds. So our legislation does provide the Commissioner with the discretion to exempt an entity from providing one or more of the statements. So we've recently finalised our advice on exemptions, and it is currently in the process of being uploaded onto our website. So once it's available, you can find it at ato.gov.au/CBC. So this product considers specific scenarios in which you may wish to request an exemption, as well as information on how to apply for an exemption. It's worthwhile noting that if you do request an exemption, we will aim to respond to you within 28 days, and that's provided that we don't need to request any additional information from you. So now we're going to work through some practical examples in relation to exemptions. So the first question being, do you need to request an exemption from lodging a CBC report in Australia if your global parent entity is subject to CBC reporting in a foreign jurisdiction? So in this scenario, no. So when you provide your local file, the way that we've designed it is that you'll provide the name of your global parent entity, as well as the jurisdiction in which it is a tax resident. So if your global parent entity's jurisdiction exchanges information with Australia automatically, and your global parent entity has filed a CBC report, then we will not seek the CBC report from you. When we receive the CBC report on exchange, your obligation to provide the CBC report will have been satisfied. So we may still require you to provide the CBC report in certain circumstances. For example, where your global parent entity has not lodged the CBC report, or where it's not available for exchange for some reason. Okay, Will the ATO exempt you from providing the CBC report and/or master file if your global parent entity is exempt from providing them in its home jurisdiction? So in this scenario, the ATO will not grant an exemption on this basis alone. So if you are in this situation and you would like to request an exemption, you'll need to provide us with an explanation of why the exemption was granted to your global parent entity, as well as supporting documentation from your global parent entity's tax authority. Okay, this next one is important because Australia is an early adopter of CBC reporting. So will the ATO grant you an exemption from providing the CBC report or master file if your global parent entity is resident for tax purposes in a jurisdiction that has not yet implemented CBC reporting? So in this scenario, the ATO may grant an exemption depending on your facts and circumstances. So if we do grant an exemption, it will apply until such time as your global parent entity's jurisdiction implements CBC reporting, or for 3 years, whichever period is earlier. So how can you request an exemption? The process is fairly simple. So if you would like to seek an exemption from any of the CBC reporting statements, this can be done by emailing cbcreporting@ato.gov.au. The types of things your request should include are the statements from which you seek exemption, the relevant reporting periods, the name, TFN or ABN of the entity that is seeking the exemption, the name of your global parent entity and the country in which it is a tax resident, your reasons, and any other documentation that you feel would support your request for exemption. It's just there. Do you want me to get it for you?
Okay, so I expect for a lot of people this is all new information that they're absorbing into their tax function at the moment as to how to go forward in terms of resourcing and collating the information that's needed. I thought just to kick off question time, I might just highlight a couple of key observations that I have had in some of my dealings with the ATO, particularly in the TP space in the last 2 years, and the type of information they're looking for, and help people know where to find the relevant information. So I'm just going to go back in the slide set. Okay. So the CBC report is a table. It's quite a detailed list of quantitative information, right? We're going to need to have details of revenues, both related and unrelated parties. You're going to need to segregate them. You're going to need to include things like turnover, royalty, property and interest income, but exclude dividend income. You need to determine your profit, including any extraordinary items. And you need to detail the cash tax that you've paid, both income tax and withholding taxes, including details of your current year tax provisions. You need to detail your business balance sheet information, such as tangible assets and equity, accumulated earnings, and the number of employees that you have at that operation. So if you think about it, it's not being asked to be prepared on a legal entity basis, but on a jurisdictional level basis. And really what the ATO is trying to get at is to understand the functions, assets and risks of your business in each tax jurisdiction. Having gone through this challenge myself, one of the areas that I found really useful was if you look in your group financial report segment information section, it will either detail your information regionally or by business, and it's an area that the ATO do spend time in trying to understand your margins by business and level of intensity in each jurisdiction. One of the challenges is often that information is normalised, so you then need to layer on top of that any extraordinary transactions that are likely to have happened in the financial reporting period. Once you have collated that information, another really useful point of reference is your review of operations, often done by your financial planning and analysis team to present to the market how the business is performing. There's quite relevant information in there that the ATO is also looking at for you to explain in a tax profile sense. Once the information's collated, it's not just a process for us of submitting that document to the ATO, but it's being able to commercially explain it. So you will have a range of information there. Can you explain any outliers or variances in your CBC reporting? Are they influenced by local market dynamics? Do you have differences in your customer base, your gross profit margin, large-scale contracts, etc.? Or are there in-country requirements, for example, foreign currency control, that are influencing your business profitability? If you cannot support the information that is there, you need to look at what additional support may be needed, or you may need to remedy the pricing on that transaction. One of the other areas I've seen is we have to ensure consistency of transfer pricing reporting across multiple tax regulators. This information is going to be exchanged to 43 tax jurisdictions. So mainly at the moment in the EU, but it includes UK, Ireland, France, Germany, Spain, Switzerland, for example, some in the Asia-Pac region, such as China, India and Japan, and into Latin America and Canada. It does not yet include the United States of America. It may be worthwhile for you to think about setting up an internal working party across your tax functions to get people ready to create and discuss consistency in reporting. I think the lodgement timeline's a challenge, particularly for those of you who are subsidiaries of US multinationals. US multinationals have only been subject to these rules in June 2016 and are actually only required to report on this information from 1 June 2017. So we will have a period of time, the first 6 months of the financial year, where your head office may not be required to present this information in their own home country. So then the question becomes, in Australia, we will still need to produce that information. How are you going about getting that information aligned with your US counterpart? It's something that I'm working through at the moment with my US tax team. Okay, just a couple of observations on the master file. The master file is really trying to get information that responds to the OECD BEPS Actions 8 to 10, which is looking at risk allocation, entitlement to IP profits, and hard-to-value intellectual IP. So the challenge in the master file is, can you clearly articulate the commercial explanation of your transfer pricing arrangements? If you are a limited risk distributor, how can you demonstrate that you are actively managed from a foreign jurisdiction? Can you diagram your supply chain and functional analysis for products that are greater than 5% of your sales, because that's a requirement that you're going to need to get your hands around in terms of reporting? Have you reassessed your allocation of risks post-Chevron? For IP, the question is, where is the real value of the IP located? Is it located where the IP is registered? Or is there value in local market expertise in selling the product that should be compensated? And if you have had an early value transfer of IP or a contract R&D arrangement, can you demonstrate the value of that transfer? There will be a review of up to 5 years in hindsight as to the value transferred versus the value created. Okay. Some people may have heard around attribution of profits on using IP, and regulators are now looking at where that IP is developed, enhanced, maintained, protected and exploited. And the information from the master file will then lead to another range of inquiries, potentially depending on how IP heavy you are and the value of your transfer pricing. Okay. The local file. There is divergence from the OECD guidance, and that's partially because under our Australian tax laws, we already have transfer pricing documentation built into Division 815. We need to ensure that even though that information is not submitted to the ATO, that you have that information available to you to ensure penalty protection. Right? The failure to have sufficient documentation or failure to lodge penalty was $4,500 Australian. It's now proposed to go to $450,000 per the 2016 budget from 1 July 2017, which aligns to these rules. So there is more penalty exposure if you do not have sufficient documentation to support your transfer pricing position. I think it's interesting they're looking at things like organisational structure. You need to detail the names and roles of individuals in the Australian entity, who they report to, and where their principal office is located. Again, that goes back to your functions, your assets, your risks, and who's making the decisions inside your organisation. Also things like listing your key competitors, I imagine will be used for benchmarking or cross-referencing analysis. Another important point just on local file is if you have branch operations, they are excluded from reporting. We're only here dealing with subsidiaries. Part B. All transactions will be material unless they're excluded. So please ensure you've got your underlying agreements in place. The ATO is saying they're going to do text searches of those intercompany agreements to look for risk analysis. If you have incorrect or out-of-date agreements, it's likely that it will increase ATO inquiry. And then finally, I think this is all around leading towards tax controversy, tax governance, and tax transparency. When the country-by-country report gets submitted in multiple entities, countries, there is likely to be an increased level of review across multi-revenue authorities. So if you're a global entity here, just thinking about what resource capacity you have to manage those levels of tax audit activity. And finally, given the increased uncertainty for a period of time, have you factored in the possibility of double taxation of profits? Does it impact the potential commercial viability of any of your projects? What about your effective tax rate and any uncertain tax provisions? But overall, we're working towards the evolution of the tax function. The tax function now is going to require a new level of data analysis and technology skills. There will be an increasing response to artificial intelligence, such as data mining. We will be required to make complex and multi-judgment decisions. with a high level of transparency and intense community focus. So we will have greater touch points with foreign countries because of the global nature of our business, including the impact of the digital economy with increasing tax regulation and review. It's important to note for these measures, the target revenue to be raised by the ATO over the next 4 years is $3.7 billion. So I just thought they were useful thoughts for people, but I now pass it over to the floor or to the webcast for any further questions people may have.
Kathy, firstly, just want to say thanks for all the additional stuff that you've included on the presentation.
Thank you.
I was eagerly taking notes. I think most of the people here would have received a lot of benefit out of that. Secondly, thanks to the ATO guys for their presentation. I found was very good. My question, and which also includes a comment, is around the efforts that you've gone to in regards to duplication with the IDS. And I think, again, job well done in listening and for taking, I guess, concerns and suggestions from people like myself and others who have faced, like Kathy, with the challenge of implementing a regime which your parent company hasn't quite come to take on as mandatory, particularly the US, which is lagging behind. Look, I think that my only comment there is that you haven't gone far enough, particularly in relation to early balances, December early balances, US multinationals. There's probably others in the room who've in the same boat. We found it, someone who's prepared the IDS for the last probably 4 years, including the trial. We've found it quite challenging meeting the timeline that's been set by the tax office, where we're lodging essentially what I consider as a more complex piece in the tax return, being the IDS. Appreciate the fact that you've removed a lot of the duplication, and that's a really, really fantastic effort on the part of the ATO. I just think there still needs to be some consideration for early balances in regards to what is required, particularly the timing. I think expecting Part 4A, not Part 4A, Part A, hopefully not expecting Part 4A, especially after my comments. But no, expecting Part A of the documentation, same time as the tax return, doesn't solve that problem. That we, and look, I don't know on the ground, but I suspect some companies are facing the same issue. The reality is that there are no magical systems out there that will, extract all the data that we need in the time frame. We are working on it. We're getting better at it, but I think some consideration is essential. And apologies to everyone for going on about this point, but I think big companies are probably struggling more than smaller companies.
Yeah. Okay. Look, that's. I was asked to repeat the questions, but I can't do that. So here you go. So with a response, look, I appreciate your comments, and thank you for acknowledging the efforts that we've made in terms of trying to eliminate and take a practical approach to dealing with duplication. Look, as project sponsor, I guess I recognise the challenges in these formative years, sort of years 1 and 2, because this is really complex in that there's stuff that we can control, but obviously being a global standard, there's stuff that happens that we have no control over. And we very much like you, it's passive. We just have to watch and see how things evolve in other countries. I guess my answer is the best thing for you to do is to come and talk to us about your individual circumstances. And that way, you know, you can get that sort of that certainty. You know, we can work with you to say, okay, well, how do we resolve this, or what is the right outcome for your circumstances? It also gives us the information. We start to learn more, you know, in these years about these practical challenges. You know, and what I'm thinking is, look, if we see a specific fact pattern, you know, we get a number of requests for exemption or deferral or whatever, because it's got an identical fact pattern. You know, we can then put that out as our practical compliance guide to go, you know what, we recognise that if you meet these criteria, A, B, C, D, therefore, look, all you've got to do is work on, you know, preparing a local file and, you know, here's the lodgement date. But until we hear from you as to what challenge you have and what the specifics are, it's kind of hard to preempt or guess. So, you know, at the moment we are learning. I think we've got maybe a dozen, correct me if I'm wrong, a dozen? Yeah, a dozen sort of requests for exemptions, based on a whole range of circumstances, each of them different. And that's been really important because we're starting to understand, you know, why that's the case, and you know, particularly, you know, looking through the issues in these first couple of years.
I'd also say I would start with your IDS from last year, right, as your baseline. But I think one of the challenges that we are facing is, well, how do we explain that in light of our financial statements? And really that's the bridge that we need to build. And where possible, if you can try and do some analysis around your segment report, what I found is if you divided it into your key activities, so, you know, you may have R&D activities with a certain expected return. You may have certain levels of royalties that you can support by a benchmark. And then you start laying out returns across businesses on a global level so that you have further support for the position that you're trying to present. It is difficult. I went through that process myself through a transfer pricing review, and that piece of analysis took me about three or 4 months over time to develop and work with. And when we presented it to the ATO, they said, this is what we're looking for, but we actually haven't seen this before either, right? So I think we're all learning, but I just think it's not just about, for us, presenting the data. I think we also need to look at what does the data mean, because before we submit it, we need to do our own risk assessment, and that includes, you know, advising our senior finance people and our board if we're likely to be low or high risk, and what that may mean in terms of resources and capabilities for next level response.
Could I just confirm that CBC does not apply to branches?
What I was saying was, in your Part A of your local file, when you're laying out the information, you do not include your branch information, because that's seen as being a member of your Australian tax consolidated group. It's not a separate entity.
Right. So under that circumstance, head office would report direct to ATO and the local branch would do nothing?
Yeah.
Thank you.
Okay, thanks again for the presentation. There's been a bit of discussion amongst myself and other taxpayers within our industry, which is financial services, just around some of the definitional issues in the CBC report. Yep. I suppose the first question is, do you expect, or is the ATO thinking about putting out any additional guidance around some of those definitional issues? And my second question is, I suppose the one that we're grappling with the most is the question about aggregation of entities within a jurisdiction versus consolidation. Now, I know that Cathy, you said before that this is jurisdictional information and not legal entity, but what's the ATO's view on that? Because I think it's quite important and will change a lot of the work that will need to be done.
Yeah, I think sort of our current position is that, I mean, the OECD has put out its guidance in terms of the CBC report. So I think your first stop should be the Action 13 final report, That said, we are working on a broader piece of guidance on CBC reporting, so there may be additional information being included as part of that, particularly in relation to some of the questions that we're seeing come up a little bit more frequently. In relation to the source of the data, you know, whether it's top down, bottom up, I think the main message that's in the OECD information is that you need to be consistent over time. And particularly in Table 3, if you could outline what source you've used, why you've done it, and any changes over time. I think that's the most important piece at the moment. Is there anything you want to add?
No, it's good.
Do you have any comments on the definition for financial services?
Yeah, look, it's an interesting one. I think financial services and you know, insurance, superannuation, that sort of business. I think when you look at the table, we've had some feedback into, well, what exactly, you know, how do we fill this in for how we generate revenue? You know, look, at this point, we haven't put any guidance out on that. I was looking to see what the OECD might do in terms of, because obviously some of these issues are global issues, and there hasn't been a great deal emanating from OECD or the Foreign Tax Administration on this. Look, it is something, I suppose, as we think about, I guess from particular industries, if there are those issues, we probably do need to sit down and work with you to say, okay, look, you know, practically, how would you complete, particularly Table 1? You know, what sort of information would you expect would sort of flow out of your natural accounting systems into to populate that information, either as close to what the OECD guidance would suggest, and then, you know, if we can land on something, then we might sort of, as Caroline mentioned, we can put out a practical compliance guide that says, look, you know, for these kind of businesses where we've said accumulated earnings, you know, here's what it could mean for your business.
Got a couple of questions. The first one is about amendments. Just wanted to understand, well, obviously all endeavours will be made to get the information correct, but is it going to be possible to amend? And secondly, how's the ATO going to handle that if it is the case? How's the ATO going to handle that after they've sent the information to tax authorities in other jurisdictions? So that's the one question. And the second one was just about the, I suppose, election, for lack of a better word, to lodge the Part A information early. Is that a year-by-year basis thing, or is that a sort of irrevocable election?
Yeah, in relation to amendments, absolutely possible. In terms of when you lodge with the ATO, you'll be able to specify whether it's, you know, in an original report or whether it's an amendment report. Similarly, when we exchange the CBC with other jurisdictions, again, it will be possible to lodge amended reports. So that's not going to be a problem. Sorry, could you just repeat the second part of the question? It was in relation to Part A and whether an election had to be made and whether it was yearly. Is that correct?
Yes.
Yeah, so I would say it's on a year-by-year basis. So if you lodge Part A of your local file with your tax return, then it's for that year. So that doesn't mean that you then have to do that the following year again if you choose not to.
Yeah, thank you for that presentation. That was really helpful. A couple of questions from me as well. Related to the guidance on master file and local file, do you expect to release the guidance on those two? Understand the CBCR is a global document, so that might be more challenging, and then the timing around that and templates. And then on agreements, understand you would want examples of types of agreements, but is there anything further you could share on agreements, like how many, or is it, you know, one per category? I suppose just trying to get a sense of the volume of agreements that you're after. Yeah. And then final question, if you voluntarily lodge Part A, assume that your master file, even though you can lodge it at that point, you still have your full 12 months to lodge together with your Part B.
Yep. So, okay, so the... got that. Yep. Okay, so guidance, yeah, no, that's good. All right, so in terms of... I'll start at the back, sort of work backwards. Yeah, so look, if you do voluntarily lodge Part A, that doesn't change the lodgement for the master file. Or Part B, so you have to meet your reporting obligations within 12 months, that's fine. Agreements, look, we are actually going to shortly release some information on agreements, particularly on the relevant agreement series, the umbrella agreement. What other information will be in that document? Yep. So that'll provide some insights into volumes there. At this point, look, with regard to agreements that fall out of scope of those two, our expectation is that, wherever there is an agreement that's associated with a related party dealing, that you would provide that within 12 months. And then on guidance, so we are working on some guidance material which we're hoping to release as soon as possible. I might hand over to Caroline, who can give a bit more detail there.
Yeah, so the guidance materials is likely to come out in parts. The first part, hopefully sometime towards the end of October, and then various iterations through to the end of the year. Again, we've received a number of questions from externals, and that is somewhat dictating some of the advice that we are releasing. I think it's going to be a comprehensive piece of guidance. It may cover, as we said before, bits and pieces of CBC report, master file as necessary, and then also some more practical guidance on lodgement, things like that. The other thing that will be coming out will be more for software developers, and that will be guidance on so the XML schema itself, but then also a guide for software developers in terms of what they need to do.
There are a couple of questions on the webcast, so I might read a couple of those out. So the first is, can you give an estimate of the number of significant global entities that will be required to lodge under the CBC in Australia, and how many do you estimate will lodge the short form local file?
So the work that we've done has enabled us to identify that there's going to be approximately 2,000 significant global entities. In relation to the local file, we're expecting a 40-60 split, so roughly 800 short form local files and then 1,200 local files.
Okay, and for multiple entities in Australia that form one consolidated group, can you confirm how many local files you are required to lodge with the ATO?
Yep, just one.
One.
Yeah, just one. Yeah, maybe just extending on the previous one, just with regard to the split between local file and short form local file. Look, obviously that's our preliminary estimate, to think that around 800 short form. Look, over time that will change, because as most of you are probably aware, the simplified transfer pricing record keeping options is sort of a body of work that continually evolves. So we're in the process now of reviewing the first tranche of those, which were released 3 years ago. And obviously, if they change as a part of this review, and as we develop more of these sort of safe harbours or simplified transfer pricing record keeping options, that will also flow through into the eligibility for the short form local file. So over time, there might be businesses who they meet the eligibility for the short form. So so obviously it'll move as those safe harbours are developed and implemented.
Okay, I've got one more on the webcast relating to US multinationals. If an Australian subsidiary of a US multinational has a calendar tax year, would the ATO still expect the Australian subsidiary to lodge for the year ended 30 December 2016, given the half-year reporting for the US group.
Yeah, so there's actually, I think there's some guidance that has come out from the US on this, the fact that they've got a bit of a mismatch between their start date being 30 June and the OECD's 1 January, which allows US multinationals to voluntarily lodge the CBC report for the full period as opposed to the 6-month period. So if that happens, then obviously the CBC report is lodged, and I think under that arrangement the US will automatically share CBC reports. So under that, if that happens, then yes, you will have met your CBC reporting obligation because the parent company will have filed a CBC report with the US. If not, I guess, look, that's one which we probably want to have a bit of a chat with you about the specific facts and just work through what it means and practically what we do expect as a part of CBC reporting and how you can best meet your reporting obligation.
Well, ladies and gentlemen, my name is Daniel Levin. I work closely together with Heather Ruddock in our Corporate Reporting Solutions team at Wolters Kluwer. On behalf of Wolters Kluwer, we just want to say thank you very much to our panel, Anthony, Caroline and Kathy, for their contribution to today's event. Kathy in particular for your insights that you've shared, and Caroline and Anthony for traipsing around the country with us for all these different events. So just a round of applause, please. We've also been running a series of webinars on getting ready for CBC ourselves, more managing the data requirements, and I just wanted to share some of the insights that we've been getting from a lot of corporations that we've been talking to around the world. Dry runs are really interesting. It's something that a lot of corporations are considering to do now. Probably a year ago they were still waiting on the fence a little bit or sitting on the fence a bit, but now is the time to start getting your plan and action for CBC. Liaising with multiple teams in the organisation, so both tax and finance, HR and the like. It won't just be one team. There's going to be challenges around language translation. That's come up in some of our CBC events. Lots of questions around exceptional criteria, but probably the biggest theme is around the local file. There's been lots of questions around the local file in Australia. And I guess in your pack, please have a look. We have got a software solution we've been working very hard with in the last little while, developing for CBC reporting, so an end-to-end solution which will allow you to also electronically lodge in Australia once we have the final requirements published by the ATO, but also be able to be deployed globally too. Finally, just a reminder, please fill out that survey which helps us determine future events, and otherwise thank you very much for your time and for coming today.